Hey, is it Tana?
Hi.
Hey, how's it going?
Good. How are you?
I'm doing well. I'm doing well. Happy Tuesday. How was the work day?
It was a busy day, but
Good
it's
busy,
over.
like putting out lots of fires, or no, good busy, like lots of fun things happening, or bad busy, like you're putting out some fires.
No, it's just our clinic day, so we see a lot of patients on this day. So,
Okay, so kind of just
um,
back to back to back.
just getting them through.
There we go. There we go. Well,
Yeah.
thank you so much for reaching out. I'm excited to get a chance to connect with you. Kind of what I was envisioning we could go through this time is just talking through some next steps in the process. I could run some different scenarios for you in the numbers so you can kind of see what payments and purchase price scenarios like that look like. I'll email you everything after we finish. But then we can also answer any questions you have. So do you want me to kind of jump into some of the things I prepared? Or do you maybe have some initial questions you want to cover first?
Well, I know I spoke with Ryan
Yeah.
and I gave him a bit of my background and the kind of what, you know, it has changed since I purchased my last home, which was a new build. I
Yep.
was divorced, so I just needed 2 weeks pay stub and I put a significant amount down and I got a mortgage, immediately. I understand that the laws have changed now and you need a little bit more than 2 weeks, which would be fine. But I got sick and I was off work for a couple of years having treatment. So I have a gap in my employment because of that.
Okay.
So I, I've heard, oh, you have to have consistent employment for 6 months. And then when I talked to Ryan, he's like, no, it's consistent for 2 years. So I just don't know.
Just trying to get a little bit of clarity, right?
Right. And I mean, if this is something that, no, this is not even going to fly, you need to rent for a while, then that's something I just need to wrap my brain around and move forward that way. Or if it's a possibility, then, great, I can move forward with this.
Yeah. So, and it's Tana, is that right? Am I pronouncing
Yes,
that right?
yes,
Okay,
yes.
perfect. So, Tana, what I would say is, you're in the medical field, right? You kind of get it. And so, like, the thing is, it's like similar, like, you can, like, say, hey, I went in for my flu test one year and it was just the flu. And the next year you go, and it's like, it's a different type of flu. Like, life just changes each time you
Right,
do a
right.
mortgage. It's going to be a little different, right? And so, what I would say is, there's lots of lenders out there, right? So I view
Right.
that today's meeting as kind of an interview. I'm interviewing for the job. There's other lenders out there. You don't have to make a final decision on your lender until you're really writing offers. Okay.
Right.
So I would say your situation is probably more in my wheelhouse. I specialize in creative things like rocket mortgage, push button, get mortgage for the people that are W-2, been on the job for
Right.
2 years, have an 800 FICO score and put 50% down. Mortgages are a little bit easier. Also, I would just say in general, rates are higher now than they were in the years past. So when higher
Mhm.
rates come into play, it makes it tougher to get stuff approved. But after analyzing it, think of your loan application kind of like an X-ray. I've taken some X-rays, right? So I think based on the information you've given me, I think there is a loan here, but there's some complexity to it. We typically need 2 years of income when you have variable income, right? So in your type of work, there's different types of income,
It
right?
is
So the
variable.
variability
Yes.
creates where we need more of a 2 year history. We can
Okay.
make exceptions and go at 12 months. Okay.
Okay.
But like, let's say you were to quit and find a new job tomorrow that was salaried or straight 40 hours full time, and if there was no real
Mhm.
variable in the hourly rate, we could use that right away. So
Okay.
that's where I would say when I looked at this, what I was going to say is your debt income ratio is a little bit high for the purchase price you were looking at. So I was going to show you that.
Well,
So a
I'm
couple.
also going to be putting down 50%.
Okay, so that would be another scenario,
So
right? So if
that's
we
a
could.
significant amount. I mean, I'm like, if I can't get a $200,000 mortgage, you know, that would look a lot different, if I
Well, and
were
it's
putting
also
down
in terms of
5%.
like what you're getting credit for in terms of your income, because the mortgage industry, in my opinion, is not really very fair because the mortgage meltdown in 2008, there's a lot of complexity. And so right now, based on the income I or like information I've got, you're probably only getting credit for about 45,000 a year in income, right? So that's where I would say is when you've got that type of income, it makes it harder to get a loan approval. But what I would say is if I could get some more documentation on the income, I think there'd be another way to make this work, right? Also, so I kind of view today being a bit of a like a workshop where we could say, okay, hey, what could we do? increase down payment. Let's decrease purchase price. Let's increase the income documentation. To
Right.
me right now, you don't actually have a lot of debt, so I wouldn't really recommend that. But
I have
are there
zero
other
debt.
sources of income that we're not giving you full credit for? And that's what I think doing that now, getting this all
Mhm.
squared away before you write an offer is my recommendation. There are people that go under contract and everything works out great, but there's also a lot of times when it creates a lot of unnecessary stress because you don't do the upfront work. And so
Right.
that was a very
And
long-winded answer. Was that helpful at all for filling in
well,
some of the
yeah,
gaps
but
from
I
the
mean, to be
conversation with
creative
Ryan?
too, I mean, just because I don't know, we're losing someone at work, I may be going to 40 hours, so that could significantly,
That could
count. I
significantly
was
change.
just working
Yeah,
Monday through Thursday, because after you go through something like that, I'm like,
yeah,
look, I just want to enjoy my life and,
totally.
so, but I'm not opposed to, making it work, for the approval and all of that.
And I would think think of me a little more like a boutique type situation. There's other lenders like Bank Merc, Wells Fargo. They're just gonna say you can't do it. But like we'll work with you. Say, hey, here's what do we need to do, Tana? Right? Like, okay, like
Mhm.
hey, if we go to here, we can make it work. Right now, it doesn't really fit the box you're looking at. But
Right.
also I would say is let's run payment scenarios. Let's make sure we can get you to a payment you're comfortable with. Right. So I think at least for today, I can show you kind of a process to
Mhm.
expect and then some numbers to expect and then some action steps. And so does that sound like a good kind of maybe agenda for our
Yeah.
meeting?
Yes. And I mean, I also, when I spoke with Ryan, I had let him know that, I was looking at building as well. It's just these not prefabricated, but it's not a high-end builder, but it's a K Havnanian home. So, they of course have lending and they're
Yep.
offering, 3% for your down and then cash free refinance within 3 to 5 years or something like that. So, of course they want to do what they can to work, but I need to find out with them too, the whole work history.
Correct. And that's where I would say, here's my commitment to you. Okay. I mean, I know, we're kind of still building a relationship. So what I would say is here, uh, actually, let me maybe make a suggestion. Here's what we could do. What I'm hearing you say is, hey, Jackson, I'm looking at existing, but also new construction. There are the Edlin or Keovini. I'm familiar with them. So
Mhm.
what I would maybe suggest is let me walk you through kind of an overview what the process would look like with me and buying homes in general and how I could potentially fit in on an existing home. It's a little more clear cut on an existing home. When it's new construction, you're buying with Kehovinian. Honestly, it's not so clear cut. Like you might just end up going with a different lender. But I still think meeting with me will be helpful to you. And it gives
Mhm.
me at least a shot to add value enough to maybe where I end up being the lender if you don't go with Kehovinian. So I think if I
Okay.
give you a little bit more context to the process and where I
Mhm.
could fit in, that might be a good place to start. And then we can jump into the numbers. And then obviously you could compare that to any of the other lenders you're talking to. Does that sound fair?
Sure. Mhm.
Okay, so then I guess here would be another preliminary question I think it could be helpful for me to fill in with some of the notes I got from Ryan is what is your ideal timeline? Do you have a deadline or a timeline that's important to you on when you get into the new home?
I mean, I'm looking to do it when I find the right home. I moved back to Texas in the summer, started back with my job, and I'm actually living in a friend's guest home and just paying her rent. So
Okay.
great place,
You
but
don't need
I
like
want
we
my
want to
own
get you into a
home.
home, but you don't have like a deadline. I have to be in by this date. It's about finding the right
No,
home, right?
no.
Okay. Cool. Then what I would say is when you find a home, here's what it's going to look like. Okay. If you buy an existing home, you're going to make an offer. Let's say you found a home in
Right,
the next 2 weeks. You would
right,
then typically have a 3 to 7 day period where you could back out for any reason.
right,
Okay.
right.
Then typically the closing timeline anywhere from 2 to 4 weeks. So let's say you went under contract December 20th, you probably have the keys January 20th under normal
Right.
circumstances. If you're buying a new home though, depending on if that home's done or not, that could be February, March, April. Whatever month you close, you always get to skip a month. So if you close in
Right,
January, first payment's
right.
March. Okay.
Yeah.
Now I ran scenarios for you on a 30-year fixed FHA and conventional loan. Okay. There are
Okay.
pros and cons to both. Okay. I then did a 50% down payment based upon what you had kind of given to me and Ryan in terms of preparation. And then we were
Mhm.
going to look at about a $400,000 purchase price.
Right.
Okay. So is that in line with your expectations, what you
That's
want to
pretty
be quoted
close.
on?
Yeah, I mean, it might go up or down payment depending, but
So we can kind of move a few things
pretty
around. But we could,
close to 50% at a 400,000. Yeah.
okay, so we're looking for 200,000 on a loan, right? So let's start
Yes.
there, right, with the quotes. Then
Yes.
to give you an idea of the process, all right, I would think a helpful illustration before we jump into the numbers is think of buying a home, Tana, and getting a mortgage, kind of like, I would say going on vacation and going through airport security. Buying a home is usually pretty fun. Getting a mortgage and choosing a mortgage lender is not really that much fun.
Right.
I
I
mean, I wish
know.
it was, but it feels a little intimidating and a little invasive, right? Having credit pulled and things like that. I do like to view my process a little more like the TSA line. I do think the process with me is going to be a little bit simpler and more straightforward and smooth. But just heads up, as you go through this process and interview different lenders, 68% of the time people get frustrated. It's very common for people to feel stressed or frustrated throughout this process. Maybe the last time you did it went smooth, but I would say generally speaking, it's a little cumbersome at times. These are some of the biggest frustrations people run up against, right? Now, if you do choose to work with me, Tana, what I will tell you is I offer an honest and competitive rate match guarantee, an on-time close guarantee, and a 100% customer satisfaction guarantee. I will close your loan on time, and if you're not 100% satisfied, I waive all my fees. Okay. Now here's the third one, right? Is I believe I offer very competitive rates. However, the reality is, Tana, if you go with K Hovinian, you probably need to go with their lender. Exit new homes, like I'm at a major competitive disadvantage. Any outside lender is because
Right.
K Hovinian is going to give $15,000 and they only give it to their preferred lender. So in
Right.
that scenario, what I'd say is get the quote from them, send it over to me. If I can match or beat it, I will. But the reality
Okay.
is I probably won't be able to. But it doesn't hurt to get a second opinion. My thought is, Karma, if I pay it forward, like if I help enough people, like even if it doesn't work out on this one, maybe it works out on the next one, or maybe you refer me
Mhm.
someone. But I'll be an honest second opinion to make sure you're not getting taken advantage because KO Vending is a good builder, but there are some bad builders and bad lenders out there that kind of bait and switch it. So it doesn't hurt to get an honest second opinion.
Okay.
And so does that make sense? That's where I think I could fit in with new construction is
Yep.
I do think there's certain builders, but if you go with Perry Homes, if you go with Bloomfield Homes, if you go with David Weekly, all of them, they'll give me the incentive. I have a good working relationship. The KO Vinian, they're very strict. Same with Lennar, same with DR Horton. They will not give the incentive typically to an outside lender.
Oh,
Um,
okay.
so, it doesn't hurt just to get opinion from you. So let's jump into your numbers. What I would say is rates are much higher and they've been very volatile this year. Okay.
Right.
So know that you can't really lock in a rate until you go under contract. So any lender you're talking to now, it's a good faith estimate. I would say rates are trading in the high sixes. Most good lenders offer the no cost refinance. Sounds like that other lender did too. I offer that same thing. I'll put a coupon in there. Okay.
Okay.
Now, where I would say rates are trading at, okay, is to give you an idea, I believe I offer very competitive rates. 6.99 is what a 30-year fixed conventional loan is trading at, and 6.25 is what FHA is trading at. Okay. So I'd say
Okay.
that is one of the bigger, that's one of the biggest lenders in the country. So I'd say that's generally where rates are trading at. But you could also check like Wall Street Journal, like they're quoting rates at 6.99, Mortgage News Daily, 6.78. So I'd say that's generally where the market's trading. I believe I can get you a better deal than most lenders. All right. I would say I'm quoting around 6.4 to 6.25, depending on the scenario. I will email you a copy of this. Okay. But let's just walk
Okay.
through it together the first time. So you'll get a website version of this and a printed PDF version of this. If you hit the more info button, this gives you your payment breakdown. Okay.
Okay.
That is inclusive of your mortgage, plus property taxes, plus homeowners insurance. Okay. Now,
Okay.
these highlighted here, Tana, are good faith estimates. They can vary from property to property. So a couple
Right. Of
things
course.
you
Yeah.
want to evaluate when you're talking to lenders is new construction. Certain communities will charge higher taxes as something called a mud or a PID tax. That would be something you want to pay attention to.
Okay.
This homeowners insurance, new construction runs typically a little bit cheaper. Older homes with older roofs, this may be more expensive. Homeowners insurance has been all over the map in the state of Texas. So working
Yeah.
with an in-state Texas lender, I think, or a local lender is going to probably serve you better. Online tools like Redfin and Zillow are terrible for setting expectations on monthly payments in Texas. I think this is a much more realistic and accurate expectation on the payment. Does that make
Okay.
sense?
Yeah.
How does that payment compare to kind of what you were budgeting and hoping for? Is that within your
Yeah.
desired
I mean, when
range?
I put it in, like, KHAV, they have an estimator and it was closer to, um, I thought it was like 2,500. But just guesstimate off the top of my head. Um, and I know there will be an association fee. I don't
Yes,
know
I did
what
not
that
include an
is,
HOA
but
fee,
it
right?
certainly
So that,
wouldn't
that,
bring
that
it
would be
up.
separate and included. That's a good point.
Right, but it certainly wouldn't be, a $500 difference. So I don't know
No, I
how,
don't.
yeah,
I think it's possible some new communities have a little bit higher property. This is the going rate for Dallas,
right.
Collin County, Denton County, okay?
Mhm.
But if you go buy out like in certain communities, ask the sales rep if there's a mud or pit tax. Sometimes that'll push this extra an
Yeah,
extra $100
okay.
down. I don't think it'd be 500, so something's got to be a little bit off,
Yeah,
possibly.
it just must
But
be what
the
I
online
plugged
tools
in.
are, that's why you want to meet with a reputable loan officer, in my opinion. Find a loan officer you can trust, work with them. Hopefully it's me, but again, that would be my recommendation because these online tools are helpful, but there's less accountability.
Okay,
So, but we good. We've covered payment. Now, this is the going rate, but you could have, if you go with certain builders and even sellers, they'll buy down the interest rate. I could probably buy this down to 4.25 if you let me negotiate the deal for you. Like, do you have a realtor? I know we kind of found each other more online.
I
Like,
do. Mhm.
okay, what's the name of your realtor?
Um, Ross Douglas,
Ross
with two
Douglas. Okay,
S's on
cool.
the end. Mhm.
So what I would say is Ross, coordinating with your lender will help. I would say I have a lot of success negotiating that rate down to 4.25 because of the current market conditions. If you buy in the winter months, sellers are more willing to give it. So if you get a 2% seller credit, I can get this rate down to 4.25. I would say any home that's been sitting on the market for more than 3 weeks, we can probably get some negotiating money to get the rate lower. This is a
Okay,
standard quote, but I probably can do better. Okay.
okay, okay,
Now, I would quote you probably around $10,000 in closing costs. So you can see that
okay.
number there. If you hit this
Mhm.
more info button, you hit closing cost, this gives you a summary page of your closing cost, okay? If we hit this
Mhm.
button here, this gives you an itemized breakout, okay? Now, I know you bought a home
Okay.
before, but just as a quick reminder, there's three things that go into
Several.
your
Yeah.
number. Down
Okay.
payment, closing cost, escrow account. Escrow account is just a fancy mortgage term. It means savings account.
Yep.
Okay, you're gonna buy homeowners insurance, you're gonna put money up front to buy it for the first year. If you close in January, this covers you for the first year.
Right.
But next January, you have to buy another homeowners insurance policy. So the escrow
Right.
account helps you in two ways. You put 525 in the escrow account at closing. Then you first payment starts in March. You contribute money every month into that payment right there. That way, by the time we get to the following January, there's enough money in the escrow account to pay the renewal. Does that make
Right.
sense?
Yeah, I never have, but I'll probably escrow just because of coming back in and my um job
I'd say
just
start with
starting.
an escrow
It's just
account. You can always call
easier
us
for
later and
me.
waive it.
Yeah. Yeah.
Unless you're dead set on it, I think it usually is better to set up
Yep.
an escrow account and cancel it
Yes,
to not do an escrow account and then create one. It's a little better
I
to go
agree.
backwards, in my opinion.
Yes.
Um, and then Texas property taxes are due in December. You put 1,700 up front and we contribute each month.
Right.
Okay, and we'll pay it in. Now, my fees, as you compare to other lenders, is $2,000. That's what you pay for me to process and underwrite the loan. Then you
Okay.
have a credit report and a flood cert to make sure it's not in the flood zone.
Right.
Then you have an appraisal fee to make sure the property's worth what you're buying it for. And you have a couple title fees. Those typically run about $1,500. The title company makes sure all the money movement between you and the seller is done correctly with no fraud. And you have a recording fee that goes to the county to show that you're the new homeowner. So if you add up
Right.
all the closing costs you see here, plus the down payment, plus the escrow account, that is how I got to that $211,000 figure.
Okay.
There is a little bit of wiggle room in these numbers. I tend to under promise and over deliver. So I would
Okay.
say we probably could do a little better. And so once we have an actual address, I can run these numbers and tighten it up a little bit more, but I wanted to give you an idea of what to, budget for. And so
Okay.
do you have any questions on the closing costs?
Nope.
Would you like me to go through any of that in more detail, or do you feel like that's good for now?
No, I'm good.
Okay, cool. So I would say that is what I've prepared for you on a 400,000. Would you like me to run more pricing scenarios? Like, would you like to see 450? Would you like to see 350? Would you like to see,
No, I mean,
yeah,
I think I want to keep it at that. I mean, I have a little bit extra if I need to go over and pay cash, sometimes if, you know, if I don't know if I love it or whatever, but I'm trying to stay there, certainly if I can get it under that and then I have to like redo a bathroom or something, then I'll have additional funds to do
I
that.
agree. We offer unlimited, no cost recasts, meaning it's always better. It's easier to put more money down than to get money out. So like if you're like, hey, I want to do a bathroom, I would say put $200,000 down, don't put 250. Hold it back. If 6 months from now you want to put an extra $50,000, just call me back and we'll put an extra $50,000 down. I think it would be better to do a recast, or we call it a second down payment. Then is kind of what I'm hearing there. We also do offer home improvement loans, so if you did want to finance that, that is something we could look at as well.
Okay.
And so do you have any other questions on the process or on the numbers? Do you feel comfortable with kind of what I presented?
No, I mean, it looks good.
Okay, perfect. So then what I'm gonna do is I will email you a breakdown of what we just went through, okay? I'm also going to include a video on the no cost refinance, so it kind of gives a little more clarity to that, a flyer on
Okay.
that. I will also include a little bit of information on picking between me and a builder's lender, kind of some pros and con tips that I found that some clients have found helpful. But I think really the next step, in my opinion, would be right now to really firm up your pre-approval. I do need some more income documentation. So I would say working with me and my partner, Ryan, to get pay stubs, or just loop us in on like if there's any potential future changes that could be happening, if you're going to go full time, if you're going to be
Right. And that's why I'm like, would you want to wait until I do and get those
yeah, I
stubs
mean,
at
we
that
could like, yeah,
time?
like if you're not in
Since I don't have
under
am in a hurry.
yeah, like I would recommend before we seriously start making offers with Ross, we get this confirmed, right? So I
Okay.
would say that would be my recommendation. And so I can just make some notes here that we've talked about it. You're expecting some additional income to come in and get that piece more clarified. Once we have that, then
Okay.
we could do that. And if you're comfortable with that, then I'd say that would be our recommendation. If
Okay.
something does pop up, we need to move quicker, then we just may have to come up with a little bit more creative solution. And
Okay.
so do you feel good with that as a plan?
I do. Yeah. Because again, I'll just, if I don't look, then I don't get too excited. It's
I
like,
know,
I don't want
right?
to
You
look
start
and
getting
then find
that buyer
something. So
fever.
I'll
Yeah,
just stay off.
absolutely.
Um,
Uh,
but no, that would be good. So we're not running, I have such a great credit score. We're
yeah,
not
we
running
just did a
any
soft
credit
credit
scores
pull.
at
We
this
do
time,
not do
right?
a
Okay,
hard credit
good.
pull till you're committed.
Yeah, because I'm
Not
always
all
like,
lenders do that, so I do encourage you to check on that, right? Because each
oh,
inquiry
right,
can affect it, but we've just done a soft. We're not going to do anything
right.
until you're committed and you want to move forward with me as your lender. So,
Okay,
um, and but yeah, was this
okay.
helpful? Do you feel like this covered kind of the things you were hoping to
Yeah,
see
no,
today?
I mean, you gave me some things that I had not heard of, the mud and the pit tax and all that. Okay. So I think once I see kind of a side by side, you said you are sending something with using you versus a builder.
Yeah, there's just this conversation comes up so often. I did a quick little video where I did 3 pros and 3 cons,
Okay,
right? And I kind of talked a little bit about, but there's just like, if
sure,
you want to
right,
reference that, there's a few tips in
right.
there that I do find that are helpful. And
Okay.
I said, I'd still love a shot at it. Like if I look at
Oh,
it and it's
sure.
a smoking hot deal with like KO Vinian, you're probably going to want to go with them. Like they're a good builder, their lender's pretty good, and their incentive's pretty strong. I'm not gonna have, but if there's some other builders you talk out there, I'm like, no, Tana, you should work with me. I'm telling you, I can
Okay,
match that deal. I can beat it, So that's where I would just say, if you keep me in the loop,
right.
I'll shoot you straight.
Yeah.
If I can be your best option, I will. If I can't, I'll say, hey, go the other way. I'm very competitive on existing homes. New construction, it's kind of 50-50. So,
Okay. Yeah. And I haven't decided whether I'm gonna do existing or new build yet. So I was just trying to get a feel of what it would look like, you know.
and I would say as a way to maybe differentiate myself, if you go an existing home, I can probably get you the same incentives you'd get with KO Vinian, right? So find a home you like in a neighborhood you like. And so
Okay.
if you can find an existing home, if it's been sitting on the market for more than 3 weeks, we can probably get you the same incentives you get with KO Vinian, the way the market is right now. You just get what's called a seller credit. I can negotiate it in the deal. I can talk with Ross Douglas about that and show him how to write up the contract that way.
Okay. Okay. Great.
But yeah,
Well, I
awesome. Well,
appreciate your
thank you. I'm
time.
so appreciative. And how exactly did we get connected? I knew we were kind of connected through
It's
social
so
media. I didn't know if there
crazy.
was
I
some
mean,
mutual
I
friends or
started
something like that.
just before I moved back and just I don't know if it's just my phone is looking at what I'm looking at. And then you came up on Instagram and I was like, wow. So I started following and I'm like, well, that's a great idea. I'd never done that in a mortgage, so I just,
Oh, good. Well, I
and
appreciate the
so
feedback.
that's how it worked.
Yeah. It's a new modern world. I've been doing this a while, but most of my business comes through personal connections, referrals through
Sure,
realtors and builders and
right,
things like that. But
yeah,
I've just tried to do more information online because that way you can get, just put out about 1 minute or so of information, and I find realtors and potential clients find it helpful. And
sure,
that's even the reason I shot this video is because like I get this question so much. It's like, hey, here's my honest thoughts on it. Here's 3 tips,
yeah,
and then it's just a more
yeah.
efficient way to communicate it.
And I knew coming into this, it was a little bit, I had to be a little bit more creative because of my,
Yep.
gap in employment with being sick for a bit. So I just felt like you had some knowledge in kind of bridging those gaps. So,
Absolutely. And that, yeah, I think that's where I could help because, there are a lot of lenders out there, but with you having some gaps and stuff like that. And are you feeling better? I mean, it sounds like you are. You sound very healthy.
oh yeah. And I mean,
But
I always question
good.
it because I'm like, if, I don't know, I know my portfolio, it's just like you would never lose this home to a foreclosure. Like if I had to put all
Well,
my
and it's the
cash
mortgage
down,
rules are
I
so
would.
weird. It's kind of like a three-legged stool. Like you have income, assets, and credit, right? Your credit's amazing. Your assets are really good. But
Right.
income is really weird. And it's this new law that passed after 2008
Yeah.
called the Dodd-Frank rule. And if your monthly mortgage is more than 50% of your income, you won't get approved. So like we're running into a little bit of an issue because right now at
Right.
45,000 in income divided by 12 times 0.5, technically your mortgage payment can't be more than 1875 per month.
Exactly.
Now,
Yeah.
can
And
you
that's
afford a
why I
$2,000
can
payment?
boost,
Yes, you
I
can
can
afford a
change that
$2,000
on my
payment, but
end.
that's why we need to get you more credit for your more income. Like if I get your income to 60,000,
Yeah.
right? Now, the thing is, we could also do a portfolio loan. Like I didn't really put that option up there, but like when I said creative ideas, we do
Sure.
temporary co-signers, we do a portfolio loan. I maybe charge you a 1 or 2% higher interest rate. And we do that short term until you can close, let's say in February. Maybe let's say you pay a little bit higher interest rate for 6, 12 months until you get your income situation a little more stabilized. And then I'll
Hmm.
flip you back to a conventional loan.
Hmm.
So we could look at those things. Like if you were like under the gun and you said, hey, Jackson, I have to write an offer today. Your assets clearly show to me you probably are going to be fine.
Right.
But it's just these government regulations. We have to kind of, work the
I get
puzzle.
it. Right.
So,
Okay.
but awesome. All right. Well, thank you so much for the opportunity. I look forward to building the relationship and feel free to reach out when you're ready to take those next steps. And me and my partner, Ryan, will be ready to finish out your pre-approval. Okay.
Great. All right. Thanks so much, Jackson.
All right.
All right.
Thank you. Enjoy your evening.
Take
Bye-bye.
care. You too.
Okay. So quick little training here on what I do behind the scenes, right? Is I've got on my other browser, um, I have the rates up, ready to go. I have the file ready to go where I can look at it and I can see what was going on with the income, the DTI, and things like that, right? Then I'm going to hit chat, or sorry, I'm going to hit email. I did CC Ryan, put him on there. So in my case, when you were shooting this, you would send it to me. You hit loan proposals, okay, and you hit insert. Now, I also keep my Vidyard up here. So when she referenced the builder's lender, I just went to Vidyard and I have a bunch of different videos I've shot. So again, there's a function of just getting more familiarized with the different videos, you know. And so I would have maybe said another one we could have done is the recast. We could have done the non-QM loans. There's some videos on there, and you just hit copy link and thumbnail, and then you can just drop it in here. So there's some ones that are already built in. These are the ones I most commonly use. I deleted out 2-1 buy down because she didn't reference it, but this is the no cost refinance, and then the 3 guarantees I offer, and then you've got to update the link. So it's very important. You copy this. This is an important thing. You have to delete this out and clean it out to where it's not blue at all, right? And you hit that, then you copy it, you hit this. It has to look like that. That way it makes it very easy for the customer to do it. Then I also like process-wise, this is what I want you to do, is I want you to include a screenshot. You can be able to do that through snippet. Okay, I just take a quick snippet here, and then I would drop it right here, and then I resize it down so it's not so big. That's what I found is better. You may need to update who was referred by because in this situation, but And then process wise, I want you to go to print, submit to print, and then save as a PDF. Okay. Then you save it as a PDF. I usually just save it to my desktop, so it's easy. Grab, and then I do upload files. And I would hit this, and then no cost refinance. Attach it, and hit send. Okay. Also in this case, I'm gonna go ahead and make my chatter notes here. Okay, or so GT 1210. No timeline to buy, but currently living with friends. What has a realtor named Ross Douglas. Understands we don't have a pre-qual now, but she expects to go full-time soon and will get us that confirmation. I told her we could explore temp cosigner or non UM products if needed, but next step would be to follow up in 2 to 3 weeks on income docs to see if she has more income. Very nice. Moved back to Texas after divorce and was really sick, but is healthy now and ready to find a home. Okay, so I'm gonna put that there. That's best place probably for it, and then I'll put there we go. All right, I'm gonna stop recording.